Hello everybody, I'm Cantonese Cat. Hey everybody, Cantonese Cat. We're going to talk about the market here in general. This is the S&P 500 ETF SPY, and this is QQQ, which is the NASDAQ 100 ETF here. You can see it's just kind of more or less been going up on a straight line. QQQ is a little bit different. It went up on a straight line, and then they kind of went sideways here for about 4 or 5 months, and right now it wants to go up in a straight line again. Regardless, they're both looking very, very bullish. Now, there's going to be a lot of people, as the market keeps going up higher, there's going to be a lot of people that are going to be worried about whether or not it's going to be the top. This is going to be the top. There's going to be a lot of like top callers. They're just going to end up coming out from nowhere, right? Is this a top? Well, let's think about it. Is it way overextended? No, not really. Both in terms of SPY and QQQ, it's not really overextended by any means. So there's not really any particular reason for me to really get worried. Is it overextended away from the tank in here on the blue line? A little bit, but not like overly concerning. So it is a very, very impulsive bull market right now. If I am to look at the GAN levels as well as the Fibonacci level, I basically drew this GAN here for S&P 500 and SPY all the way from the bottom of the Great Financial Crisis. You can see that it's really been gravitating from one arc to another, and right now we're just kind of pushing through the arc here. Now, doesn't mean that we're going to come back down and back test the arc here at some point. Possible, but it doesn't have to. It has broken above, on the S&P 500, it has broken above the 1.618 Fibonacci level and broken above the arc here. So if that's the case, that means it's probably going to gravitate up to the next level, which is going to be really the top of the GAN square, around like 783, somewhere around there, or 780s, I should just say that, which means that you have quite a lot more room to go, maybe another 20% up to go before any major resistance can be felt. Sometimes cycle ends at 2.272, so that could also potentially be a cycle top, but we're nowhere near it right now, right? QQQ, what happened to QQQ? Do a GAN chart here. Now, same thing, right? Start again here all the way at the bottom of the Great Financial Crisis. You can see it's just been respecting the angle up here, and it's just been respecting these arc, and then this arc here got rejected, came back tested the angle, and then got rejected. Initially, the arc here was eventually able to push through. As we push through the arc here, we spent about 4 or 5 months here at this horizontal line over here. Why do we spend so much time here? It's because it's also the 1.414, which is generally also a pretty important fib level. We were able to push through that and have 2 really bullish candles. We're about to hit the 1.618 here, which could potentially be some resistance level, but I don't think it's going to be that big of a resistance because it already spent a long time getting stuck underneath the 1.414. So I don't think it has to get stuck in 1.618 here again. If I think what I think is going to happen is probably going to go to the 2.272 here before finding any major resistance. But ultimately, if it's been going from arc to arc like it's been doing, the arc is going to be up around here. You're potentially going to hit anywhere around like 900 to 1,000, maybe sometime around 2026, 2027. That's going to be where the arc is going to be at. And that's if it goes up from arc to arc like it has done before, then you're talking about potentially almost getting to close to doubling of the NASDAQ, right, or QQQ, which is not anything crazy to think about because honestly, from the bottom of the 2022, we've already gone doubled and more, right? So it's presumably it's possible for QQQ to just keep on going up here and double over the next couple of years, which is entirely possible. Now, if you ask me whether or not there's any other additional proof that the bull market is going to keep on going, there is some additional proof, which is the QQQ over SPY chart. This is a monthly chart of QQQ over SPY. You can see that it's been trying to break about this level here for a very long time, and I think we're about to break it. This is QQQ over SPY. This is a ratio chart, so if this goes up, that means that QQQ is basically outperforming the S&P 500. In a bull market, that's generally going to be the case. In a bull market, QQQ outperforms the S&P 500, and it's been doing so really ever since the bottom of the dot-com bubble. It's just been outperforming, QQQ has just been outperforming S&P 500, right? So in order to kind of look at this, I pull up the Bollinger Band here on the monthly. You can see something very, very exquisite here. You have felt that over the last year, or last half a year or so, the QQQ has just kind of been lagging because maybe NVIDIA is just kind of going sideways. But S&P 500 actually has been going up on a straight line, so as a result, you're actually going to end up having a little bit of a outperformance SPY over a QQQ, so the QQQ over SPY chart is going to be declining just like this. With that said, the trend is still up, right? This is a 20-month moving average. As you can see, that it is still up. QQQ still most likely wants to continue to outperform S&P 500, right? You have a very, very crazy Bollinger Band squeeze here. It tells me a big move is going to happen. You have a big giant green candle here. So far, this is a Marubozu candle, which means that it's favoring further bullish continuation. Granted, the month is not ending yet, but let's say if the month ends here, I think next month is going to be green. And because of Bollinger Band squeeze, that tells me a big volatile move is going to come. And it's probably going to push price up to the upside, right? Trend continues to the upside. Higher high here, higher high here, higher low here, higher low here. So it's probably going to end up keep on pushing price up higher. And that means that QQQ is going to be performing S&P 500, which basically means that in general, a bull market is to resume. Now, the biggest problem with looking at SPY and QQQ is that they're not really that cycle dependent. They are somewhat, based on arc here, arc here, arc here. They're a little bit more cycle dependent, yes. QQQ may be a little bit cycle dependent here, yes. But over time, they just kind of keep on going up to the right side. What is the better way to look at cycles? I would argue is actually the IWM. IWM gives you a really, really nice picture of the cycle here. One cycle here, one cycle here, one cycle here, one cycle here, and then we're starting another cycle. One way to really decipher that is look at a Bollinger Band. You can see that whenever you have a cycle that's beginning, you have an expansion of the cycle, followed by when the cycle is ending and exhausting, you have a Bollinger Band squeeze, right? Expansion, squeeze, expansion, squeeze, expansion, squeeze. And right now, what do you have? What do you have here? You have expansion, right? You can also look at the 20-month moving average, which is the median of the Bollinger Band, the orange line over here. You can see that whenever it goes from negative to positive, that's when the bull market starts. Or whenever it goes from flat to positive, that's when the bull market starts. Whenever it goes from flat to positive, that's when the bull market starts. Whenever it goes from negative to positive, that's when the bull market starts, right? And wherever that flip happens, whenever you start having positive sloping 20-month moving average, generally things last bullish to anywhere from like 12 months to anywhere to like almost like 3 years, So right now, where are we at right now? We have probably started this for about a year. The bull market, I suppose, can end now or it can keep going for another 2 years, which is ridiculous, right? I happen to think that this bull market is going to keep going. There are a couple of reasons for it. One is if you look at the Ichimoku cloud, which gives you a few things. One is you usually have a bounce off the cloud before you have a bullish market, right? For each cycle, here's the Ichimoku cloud bounce here. Here's the Ichimoku cloud bounce here. This is the Ichimoku cloud bounce here. This is the Ichimoku cloud bounce here, right? Whenever it bounces, it keeps on going for, let's say, 3 years, 2 years, 1 year. So far, we're about a year in. This actually is like about a year and a half, I guess. So far, about a year in. I think it's still early, right? We bounce. Actually, if you argue like, hey, you don't actually just keep bouncing here, then we may be even just half a year in, right? So there might be another additional 6 months to like 2.5 years based on past experience here for it to keep going. The other thing is you look at the bullish cross here of the blue and the red here. Blue crossing over red, blue above red is bullish. And during the beginning of a bull market, generally you start seeing expansion of the blue away from the red, right? Tenkan Kitchen cross followed by Tenkan Kitchen expansion, right? You have expansion here that kept on going for 3 years. You have expansion here that kept on going for 2 years. You have expansion here that kept on going for a year and a half. And right now we have an expansion that has been happening for about 6 months. All of these are telling you that this is still a relatively young bull market because of how cyclical the IWM is, because these are small cap stocks. They generally hold a lot more debt-ridden companies, and they're just going to be a lot more economically sensitive. Now, if you're looking at the actual current cycle here, I'm going to zoom into the actual current cycle here. It's very, very important to look at a couple things. One is to look at the Fibonacci sequence. The Fibonacci sequence is being drawn here from the cycle top here all the way to the cycle bottom, right? So all the way from November 2021 when it tops all the way to the actual bottom around October 2023. 2 years a downtrend, followed by an uptrend. As you can see, as it goes up, 0.786 was a very strong resistance level. We're able to break above that. And right now, we're just basically back testing the 0.886 here, which is a very important horizontal zone here that has been spent as resistance for about 8 months. Right now, you've pushed through it like it's butter in November to remember, and you're basically spending December back testing that area. If we're able to flip a very important resistance level here into support, that really does mean that most likely scenario is going to keep on having some crazy bullish continuation. They can hit some of the higher targets over here in the high 200s to the low 300s. How high it's going to go, it's going to be hard to tell for sure, but I think that this cycle is probably going to end up hitting somewhere around like 300, if not a little bit higher. Each cycle have the breakout, if you will. Here during this cycle, this is the breakout candle here in November 2016. Here's the breakout candle in November 2020. It's quite convenient that in the November 2024 is also a breakout candle, right? So now that we had the breakout and have the back test, I think we're going to go a lot higher. And that means that this bull market is going to continue. That means that if the IWM is doing well, that means a lot of speculative stocks are going to do really, really well. And one thing is already happening is that a bunch of speculative stocks in the ARK fund is already doing very well. They're already pushing above the ARK up here. They're already wanting to push through the 0.382 here, and it wants to grab it up to the ARK up here at the 0.618, right? That's already happening. Now, if you're looking at rates and yields, a lot of people are always like worried about yields and yields and yields. I'm not worried about yields because they've been rolling over. I basically just called the top in October 2023 because I see a lot of signs for trend exhaustion. And sure enough, whenever that happens, it plummeted, right? And then when rates came back up here, formed a lower high, everybody's like, oh, rates going to go back to the moon again. No, it's a lower high. This is a rolling over look. It's going to come down. Well, right now, what is it happening right now for the 2-year and the 10-year? It's rolling over. 2 years rolling over faster than the 10-year. 2-year is already flipping the 20-month moving average here from support here to resistance, right? And the 10-year is really getting exhausted. It's still using the 20-month moving average as support, but it's getting weaker and weaker, and there might be a trend change that's happening soon for the 10-year. 2-year, the trend change has already happened. This is a lower low compared to here, right? This is a lower high compared to here. And right now it's trying to form a lower high. Can 2-year go all the way to like 4.5? It's possible. Do I think it has to? No. Why do I think it doesn't have to? Is because you also on the Ichimoku cloud here on a monthly had a bearish cross over here, bearish Tenki Nikijin cross, where red gets above the blue. That tells me there's room for it to potentially, if it continues to get rejected over here at the Tenki Nikijin, or the red or blue here, then it probably end up going back down to the cloud here. I totally see it hitting maybe anywhere from 3.5% to 3.3% for the 2-year, and that would bring a lot more liquidity into the system, and that would allow more speculative stocks to actually do relatively well. 10-year, not quite hit the bearish cross yet, but it really looks like it's trying to roll over, and I do think the 10-year is probably going to hit around the same rate, maybe anywhere around like 3.5 to 3.3%. We'll see, right? Key thing though too is a lot of people also looking at the VIX. They're like, oh, the VIX is going to go up a lot higher because we're having low VIX, right? Low VIX usually must mean higher, right? Well, not necessarily. Let me change this to log scale here, which is probably going to blow your mind. I don't know if it's going to blow your mind, but if I do a bull in Japan here, the key thing though is that right now the VIX is underneath the 20-month moving average. That means that there's more room for it to potentially go to the downside. When I see this mythology here, it really does remind me of what's happening over here around 2016, where you had these spikes over here, but you might end up having like a year and a half of low VIX that goes to the single digits, especially if people are calling for higher VIX now because VIX is so low, so to speak. I think it's actually not going to be that spiky anymore. You already have a VIX that like spike all the way down to the 65 over here back in August. That's an anomaly. I don't think that's necessarily going to happen again anytime soon, right? So that's something that is getting me a little bit more bullish on the market. The other thing to look at is the US oil. I turn off the Bollinger Band for now. What does it look like? It looks like it's rolling over. This surprises me because China, if they can keep printing out money, if they're going to keep pushing out stimulus, it surprises me that oil is not going to go up. Maybe it's because the US starting to have more efficient production and is lowering the cost. I don't know. But this basically looks like it's rolling over, and this looks like a descending triangle. Looks extremely bearish for US oil. Looks like it wants to kind of fall through. I don't know. We'll see whether or not that happens. Right now, I probably wouldn't want to get into any like oil and gas stocks. You remember how people were talking about oil and gas stocks back in like in 2023 because oil prices was going up and form a lower high. Everybody's bullish. I was like, no, that's not where I want to be. So this is kind of what's happening right now. If you wonder about inflation, it's not happening. If you wonder about rates, it's going down, but not in a drastic manner. So I don't really know what the worries are here at this point for the market. I really don't. Okay, so one more piece of evidence that people might point to you like, hey, I don't know, something bad might be happening. They're talking about the US dollar index, the DXY, how it's going to form a little bit of a higher high here. That might be the case, but it's still got a rolling over look to it. It's still got the dead cat bounce to it, look to it. And on top of that, if you look at the Fibonacci cloud, it's just basically bounced into the cloud and then bounce through, back test the upper part of the cloud here. If it gets rejected, which I suspect it will, then it's going to come back down here and it could break through and it could break through further. That's kind of what I'm looking at here. I am not bullish on the US dollar index. But it's okay. I think if you worry about US dollar index causing some downward pressure for US stock market or Bitcoin, I would not worry about it because honestly, as long as the US dollar index is stable, then the stock market and Bitcoin have room to go, right? You see how the US dollar is kind of going up here, up here, up here. But as long as the US dollar is stable, then you have room to kind of go up, right? Same thing here. You actually have a big giant rally here from the 2014 to 2015. So having a spike in US dollar doesn't necessarily mean recession, doesn't necessarily mean that stock price and crypto prices are going to go down. But it does help if you have a little bit of a rolling over look to it. It does help if the US dollar index goes down. It's not a necessary requirement for a bull market, but it's helpful. Let me just put it that way. Anyway, I just kind of want to share with you, like, there's basically every single thing I'm kind of looking at here, look at indicators, look at momentum. There's really nothing that's really telling me that we should be super, super scared about what's going on with the broader market. So I'm not going to be scared. On top of that, Bitcoin is doing extremely well. I'm going to save that for a different video. But I just kind of want to do a little bit something different here. I usually do some macro talks and things like that. I haven't talked about the market for a very long time. Just want to share my thoughts here. I think it's going to go a lot higher. Anyway, thank you so much for listening. Have a good one. Bye.